All right, good evening, everyone. It is time for another Friday night Forex and Chill. And you guys know I love to bring you different traders so you can get all this different knowledge because everybody sees the market different. So I want you to be able to have different aspects of the market, different people you can follow. You never know who might be that one trader that's going to have something that clicks for you or gives you that aha moment. So what we're going to do tonight, I'm just going to ask you to stay muted while our special guest gives his presentation. I found this gentleman by following the Trade House, a group of great traders who are with iMarkets Live, and he's one of their top traders. And I reached out to him. I'm like, hey, come hang out with us Friday night on Forex and Chill. And he's like, sure. So his name is Jon Fibonacci. He's a 5-year professional trader. I think, John, you got started on Wall Street. You did stocks first?
Yeah, about a little over 5 years ago, I first got started in stocks, and about a year or two after that is when I got into Forex.
Awesome. And so tell us a little bit about yourself and how you got started trading.
That's kind of a long story. It's unfortunate that I grew up in a school, right, where we never learned about economics like that. I think I had one teacher mention the stock market once, and that was about the extent of it. And my dad told me growing up that his dad actually traded stock as well. And it wasn't until I joined the Navy, actually, is when I had a little bit of free time on my hands and really dove into it and learned things for myself and, watched YouTube and did trial and error, baby pips, all that. Um, but that was a long time ago, so I've come a long way from that. But that was kind of how I got started. So I, remember being on the charts every night, trying to find the answers and stuff like that. And over time, I did. And I'm very fortunate for that.
Oh,
But
well, we're fortunate for that since you're going to share some skills with us tonight. And I didn't know that you were prior military. Thank you for your service. My dad was Navy.
I
Um,
appreciate that.
so what I'm going to do is I'm going to let everyone know. Again, guys, this is Jon Fibonacci. You can follow him on Instagram at Jon Fibonacci. That's his name on Facebook. If you see it down here at the bottom of the flyer, make sure you guys follow him. He is a part of iMarkets Live. He is a part of the Trade House. If you follow those guys, he's a phenomenal trader with a lot of knowledge. He's got a Facebook account, an IG account, and he's also reviving his YouTube. All his links will be posted and how to contact him. And I'm going to stop sharing, and you can start sharing your screen. And you can just take it away. You can tell us a little bit more about yourself, or just jump right on the charts. Whatever you want to do, the floor is yours.
I got you. Thank you. So you guys can see my chart, right? Or
Yes, we
no?
can.
Okay, awesome. So if I could actually get the chat, I want to know how long you guys have been trading, because I know everyone's different and everyone learns different as well. So if you guys could just tell me how long you've been trading, that'd be awesome. And while you guys are doing that, I'll kind of discuss what it is that I see in beginner to intermediate traders that are red flags. They're doing stuff that I used to do, and they shouldn't be. All right. So let me just check the chat real quick, if I can. Okay. So I see a lot of months. 1 month, 6 months, year and a half, 2 years, 6 months, year and a half. Okay. So there's a few of you who have been trading about a year and a half, 2 years. I see another 3 month. Okay. So what I see amongst beginner to intermediate traders, all right, the very first thing that I notice is that you guys like to trade on the lower time frames. So the lower time frame, meaning in my book, anything less than a daily. So a 4 hour, 1 hour, 30 minute, 15 minute, 5 minute, whatever. Anything less than a daily is a lower time frame. So a lot of you guys see charts like this, right? Where you've only got, a couple of days worth of data. All right. So when you're trading or getting ready to place a trade, you're doing your analysis with just a few days worth of data. It's just not as highly accurate as you would be if you were trading off of a higher time frame, like say a 4 hour, for example. Even though it's lower, it's bigger than the 1 hour and the 15 minute. So now you're getting a couple weeks worth of data. So you can see bigger, stronger levels, right? And that'll give you better trades, okay? And it'll give you more pips as well. So let's see. I don't know why this doesn't keep working. It's like I can't see the chat.
Yeah, I see it popping up at the bottom. You want me to monitor it and let you know if anyone has questions or?
Yeah, if you could, that'd be cool. So yeah, what I do in my trading is I work from the monthly all the way down to the 1 hour or the 15 minute. Okay, so if you want to write this down, that's fine. So what I do is called a top-down analysis, okay? And that's literally going from the higher time frames down to the lower, all right? So some of you may never even looked at a monthly chart before or a weekly chart, but I highly recommend you start doing so. And like we were discussing before I started, trading is not always supposed to be fun and exciting. It's not supposed to be like, I don't know, like a soccer game or a football game. A lot of the times it's supposed to be boring. All right. Because we're not here for the sport. We're here to make money. Okay. But so like I said, when doing my analysis on the weekends going into the week ahead, I like to start from the monthly, and then I'll go down to the weekly, then I'll go to the daily, and then if I need to, 4 hour, 1 hour, 15 minute. Okay. So a lot of people like to day trade. Few people like to swing trade, and really nobody likes to position trade. Position meaning like, I've been holding a trade since like March or something, like really, really long time. So most of you guys are probably day traders or like intra-week traders, okay? Now, mathematically, the best possible compound interest comes from swing trading. All right, just statistically and mathematically, swing trading over time will outperform day trading and positioning. All right, and I won't really go too much into the research on that. You'll just have to take my word for it. All right. Now, the reason that we use the higher time frames okay, the daily and the weekly is because the banks and institutions, market makers, whatever you guys want to call them, they operate primarily on the daily and weekly time frame. Okay. So the way that I'm able to profit so much in the market is because I try to align myself with the banks and institutions, okay? Because they're the ones that move the market, all right? They're the ones that have the millions and billions of dollars, whatever the case is, okay? Everyone's 401k account, all that. So when you understand when and how the banks move price, that's what I try to align myself with, all right? So we're catching the big down moves or the big up moves, so on and so forth, all right? I'm going to continue on the charting aspect of things. All right. And I know a lot of you guys also like to use indicators. Okay. Whether it be like a MACD, on RSI, moving averages. Like, it really doesn't matter. Anything that's like overbought, oversold, whatever. All indicators are just a mathematical representation of price, right? So you think like a programmer for a second, and I'm not a programmer. I know a few, but that's neither here nor there. When somebody programs an indicator, they have to input data for that indicator to use, all right? And then it spits out whatever, it wants, okay? So they're literally taking the price data and just re-representing it, okay? So nothing actually beats price itself, all right? Whether it be candlesticks or bar charts. I really don't use line charts. I primarily stick to candlesticks and sometimes the bar charts, all right? But if you get into studying bar charts, it's kind of hard on the eyes. So I just really stick with the traditional Japanese candlesticks, all right? And I know you guys also look for candlestick patterns, like, I don't even know what they're called anymore, like the three white soldiers or the engulfing, and I don't even know what else is out there because I don't use them. Dojis and hammers and inverted hammers or tweezers, and I mean there's an endless number of names for different types of candlestick patterns, but they generally don't work. Okay, they work to an extent, to some extent, because the market makers at least want to give you that profit here and there, even though overall they're going to take more than what they give out, right? That's why 90% of retail traders lose, right? And I could throw up an indicator and I could cherry pick different scenarios where it would work, but most of the time it wouldn't work, okay? So as far as my trading goes, this is like the extent of my charts, okay? Black and white candlesticks. I don't use colors. I don't use indicators, and I just keep it clean. All right. So besides candlestick patterns, other patterns I notice are like chart patterns. So like flags, pennants, or harmonics, whatever the case is. Let me see, for example. And I wouldn't do this, but I know that some of you guys might do something like this where it'll be, like some type of flag breakout or breakdown, or I don't even know. I haven't looked at these in years, but you get the picture. I know some of you guys know what I'm talking about. So with that being said, I don't use those. All right. I do use lines, but I only use two type of lines. Okay. One of them is a vertical line. Okay. So that's a line that's just going up and down. All right. And the only thing that's going to tell me is the day and the time. All right. What's going to tell me the time if I'm on an intraday basis, but if I'm on like a bigger time frame, it'll just give me the day. All right. Now, this is important when you get into trying to time the market, right? Because when I do my trading, we have what's called like seasonal tendencies, like something that happens seasonally, like with gold and silver or with euro. I mean, really any asset has its own typical season, but I like to know the beginning of the month, the Sunday open, or like a certain day's open and stuff like that. So I use vertical lines just for that, okay? And the only other line I use would be a horizontal, okay? So the only thing that we get from a horizontal line is the price, all right? So just for sake of example, this is 96.55, right? And that's it. That is all the information that I need from these lines, just the date or the time and price. All right. Let's see. Yeah. So I know a lot of you guys probably have been on free websites like YouTube or whatever other videos you can watch. And I know Baby Pips comes up a lot too. If you guys could in the chat, let me know if you've been through any part of babypips.com, or if you've been through the whole thing on Baby Pips, you should let me know. Or some type of free groups or free signal services and stuff like that. So I know some of you have probably been through some free stuff. So let me just check real quick. I'm in it right now. Yes. A lot of you are saying yes to Baby Pips. I told you. Been there before, done that. Telegram groups, YouTube channels. Well, probably the only YouTube channel you should be subscribed to is mine, but it's all good. So we're getting a lot of yeses from Baby Pips. Okay. I went through Baby Pips a few years ago, and from what I remember, I know they go through kind of a lot. They go through like the basics and stuff like that. The more advanced stuff is really not so much advanced as from my perspective. Like, I don't look at that as advanced.
Right, there you look at it.
I'm sorry?
You can keep going. Someone was unmuted. We'll get them muted. Everyone, please stay muted until question and answer time. Thank you.
That's all good. I'll drop the link to my YouTube channel at the end. I actually don't have any videos right now. I took them all down, but either today or tomorrow, I'm going to start uploading videos again. Okay. Okay, so again, we got a lot of yeses on Baby Pips. So the more advanced stuff that they teach is kind of what I told you earlier about, like RSI divergences and harmonics and what else is there? Moving average, crossovers, and Bollinger Bands. And I know they do some Fibonacci, so I'm not going to rag on that because Fibonacci is awesome, but the point I'm trying to get across is that think about the value of something that's free, right? Baby Pips is a free school, right? And these other free groups, free signal services. Let me ask you, what has been the performance of some of these free groups? What type of performance are you getting after going through the school on Baby Pips, right? Hit or miss. Exactly, right? Which is why still 90% or more of traders don't make money in the markets, right? So just think about the value of free next time you go through one of these free groups or free schools, okay? So what I'll actually do for you now is I'll do a lesson on the horizontal line that I use, or horizontal lines that I use, okay? So most people, when they hop on a chart, right, they'll immediately go to the candlesticks. They'll immediately start looking for, like I said earlier, these candlestick patterns or triangles and shapes and butterflies and crabs and whatever else, right? What most people fail to realize is the most important thing is sitting right there in your face, but most people don't look at it. And that's the price itself. What is the actual price? Okay. And the method that I use, okay, and I want you guys to write this down too, which is why I'm putting this up here. I like to use what's called whole numbers, okay? And it's literally what it sounds like, okay? So a whole number is going to be a number that is practically zeroed out, okay? So I'll give you an example. Well, this is just dollar index. This is just what I had up. I'll go through a couple different currencies for you if you want. But the very first whole number on dollar index would be 98. Okay. Now the next one would be 97. Okay. But I like to use even numbers. And even after we're done today, and you guys go back into your own charts and you start to use this method for yourself with the horizontal lines, looking just at price, looking at whole numbers, you can learn to teach yourself this without needing me in front of your charts for you. All right. You can do this for yourself. Take these horizontal lines and place them at even numbers. Okay. So 98 was first. 97 was next, but like I said, I like even. Okay, so the next number after 97 would be 96. Okay, and this is just with dollar index since I had it up. All right, so you can see recently, back in late June, you see how price, it barely went below 96 and then it rallied from there. When you have a long-term downtrend, and price is hitting a whole number and it's either consolidating or consolidating a little bit below, that's a bullish sign, okay? That's telling you that the market is accumulating, getting ready to go long, and it did in this scenario, okay? And it also works the opposite, right? If you're on a long-term uptrend and you've got a whole number, price will usually hit the whole number. Sometimes it might bounce off at first, but majority of the time it's going to push through, okay? And that's when you get into like market manipulation and stuff like that, which is what me and my group get into, okay? And when you guys join my group and we start doing more training every week, I'll give you more details on that, okay? But yeah, so for now, just know that I use these whole numbers in my trading, all right? And it even goes down to like 80 and 20, but that's kind of more for smaller time frames, all right? So let me find another example for you. I actually traded GBP USD this week, also known as cable, all right? So what I'll do now is I'll mark up a few whole numbers for you. So just give me a second while I do this. A lot of times I have to type it in because I want it to be exact, all right? And so like I said, it's just a whole number that's zeroed out, all right? So 1.26 would be our whole number. The next even one would be 1.24, which we actually didn't get to, and I'm going to tell you why in a second, all right? There's also what is called quarter figures. Okay, let me write this down. Or whole numbers, and we'll say quarter numbers. We'll just keep it the same. Okay, quarter numbers. So that's exactly how it sounds too, where it would be 25, 50, and 75. Okay, and then obviously 0 and 100 would be in there as well, but that would just be considered a whole number. So the only quarter numbers inside of that would be 25, 50, and 75. Okay, easy enough. So what's interesting, and I'm going to have to zoom in here a little bit, is that if I take a horizontal line, in between 26 and 24 is 25. Okay, so that 1.25 is going to be our quarter figure. And that's why we didn't go down to 24. We actually went down to what's called a mid figure, or like a mid whole number, which again is exactly what it sounds like. It's going to be the halfway point between 24 and 25, all right, which would be 124.50. Okay, so it's basically a quarter figure, 1.25, and then in between that is another quarter figure, 124.50. All right, so I hope you guys are still on the same page. If you need to re-watch the recording, you may have to, and it's not a big deal. Okay, but that's why we didn't go down to 124. and I didn't expect to do that anyway. So I'm going to take this one out. All right. So now, from the daily perspective, look at what happened from going left to right. Look at this candlestick here on July 5th. All right, daily time frame, July 5th. That was a Friday, I believe. Yeah. Price opened, right? And throughout that day, it came down to, what is that, 124.81, 82, something like that. And then it closed above 125, okay? So a lot of traders got in at the 1.25 level, okay? That's obvious because price dipped through, but it closed above at like 25.20, right? So that was potential bullishness. And honestly, that was probably just a run on this low as well. And I'll get more into that once you guys join my team in IML. We go over a lot of that stuff as well. So the market kind of consolidates the next day, and I believe that was Sunday into Monday. I'm not sure. But either way, the range wasn't that big, and that's fine. So look at what happens on July 9th, right? Price runs down past the low that we set last week, okay? So why do you guys believe price would break down below a previous low? Why would price do that? All right. Let me see if you guys can respond in chat. Quarter Theory is a good book. I actually haven't read that book, but I have heard good things about it. I just have the experience. I've been doing this for 5 years. I just have the experience from that, but I may read it one day. And these numbers get respected, especially on indices. Yes, and actually, side note, speaking of indices, Dow Jones and S&P 500 closed at all-time highs today, okay? And that's pretty cool as well. All right, so a couple of you guys said stop loss, stop hunt, same thing, introduce sellers into a trap. That's pretty much the same thing. It's just kind of worded differently. So, yes, you're still correct. To test that area, it's not so much a test, but these other people were right, actually, about the stop hunt, okay? Because what happens is they see this low, and that's where they're going to place their stops at, or like maybe just below that low, okay? So this, on July 9th and the 10th, this was your market manipulation, okay? So it ran those stops, and then obviously you can see the last 3 days on GBP have been pretty well. From the open to the close was about 114 pips, which I actually caught. A little bit less than that because I got in about 60. I think it was like 20 or 24.60 or 62, something like that. It was the low 60s, okay? And I didn't catch the very low, and that's not always my goal, all right? Sometimes I'll get in on a retracement, but yeah. So it ran the stops here, okay, and it went down to our mid figure that we would anticipate it would if it would run these stops, okay? So it hit that, and then now we're rallying from there, okay? But now I got this trade set up because of the quarter figure, the 1.25 level. Now I know if it breaks through on, say, Monday or Tuesday, that's fine. When I place my trade on Monday, Tuesday, Wednesday, whatever it is, it doesn't matter. I'm thinking about where it's going to be a week from now or a month from now or something like that, right? And we get more into like picking upside objectives in the group as well, okay? But there's only so much I can do in one webinar, all right? But yeah, so we get that from the 1.25 figure. So now going back to what I was saying earlier, the top-down analysis, once we get this from the daily time frame, that's when we can go into our lower and start looking for a buy opportunity, okay? Now, it's obvious, right, that I go by Jon Fibonacci, right? There's no doubt about that. You guys know that, right? You've seen the flyer, you see my name and all that, right? So I like to use Fibonacci extensions and retracements. Most of the time retracements. I actually rarely look at extensions, but I still have them. It's just rare, okay? So pay attention, okay? When price started to consolidate after the run, right? Let me just mark this real quick. Okay. The market comes down in order to take the stops here, and it starts to consolidate, right? So watch this. We have two highs right in here, okay? Price breaks these highs with this high right in here, right? On the 15-minute, or excuse me, the 1 hour, sorry. 1 hour time frame, it jams through that, comes all the way up here, and then it retraces lower, right? It retraces. So what do we use? A Fibonacci retracement tool, okay? After the new high was made, all right? And if you don't know this on TradingView, what I do is I use my Fibonacci retracement tool, but over here on the far left side, if you guys can see this, there's a little magnet tool right here. If you click that magnet tool, what it will do is it will snap to the price that you want it to, okay? Just like that, versus having to like try and draw it for yourself. So it just snaps right to it, okay? So now as we get our retracement, that's when we start looking at our 50% or 61.8 or 786 retracement, okay? Now, there's a few reasons why I expected price not to come down to the 786 level or the 61.8. And when you guys join my group, I'll be more than happy to explain why. So for now, we'll just use the 50%, okay? 50% retracement. It comes through a little bit, not a big deal, okay? Now, this pricing is the 2460s that I mentioned to you when I got in, right? We'll just say this area right in here is the 60s, right? From 2467 down to 2456, right? So not a big range there. So had you got in at the 2467 level, right, the 50%, your drawdown here was at most 5 pips, okay? We'll just go ahead and say 8 or possibly 9. And the only reason I say that is because of spread, okay? So we'll just round it up to 9, all right? 9 pips of drawdown, okay? And by the end of today, it closed at 105, maybe like 102, 103 if we take spread into account, right? Don't ever forget about spread, all right? So 9 pips drawdown, 100 pips in profit, okay? That's a risk to reward of like 1 to 10, all right? So that's the type of trading that is going to put you at an elite level, all right? Risking 1% to make 10% or risking 2% to make 20%, whatever the case is, all right? Or even 1 to 5 or even 1 to 3, okay? And you want to write this down too. You always want to risk less than what you're potentially going to make, all right? And just to give you guys a little bit of insight on my trading plan personally, my minimum risk to reward ratio, if you guys can see that, is 1 to 3. All right. So if I'm risking 10 pips, minimum I'm willing to walk away with is 30. All right. Either I'm going to lose 10 or gain 30, and that's it. Right. So I hope that helps you out. But this is how I basically got into that trade. And I'll walk you through it one more time before we go on to a different pair, or if you guys have some questions, okay? We started on the daily time frame. Let me refresh this up a little bit. We started on the daily time frame. I used a simple horizontal line tool to delineate where 1.25 would be. Then I go down to the 1 hour or the 4 hour, whatever, it doesn't matter. We recognize this low being distinct, right? Because this is the only low, you know, in this whole area, that should be pretty obvious to the eye, okay? Especially if you guys have been trading for a year and a half or 2 years. You guys know what a distinctive low is, okay? This was a run on stops. It consolidated, okay? It made a new high on the small time frame, okay? We can all agree that these are highs, right? Because these are highs, and it retraced lower. It made a new high on July 10th during the London session, right? No surprise there. London session, right? Retraced lower during London, and then the U.S. Overlap, you know, banged it higher, all right? So new high, Fibonacci retracement. In anticipation, 125 was going to be support on the higher time frame, and there we go. Low drawdown, all profit, okay? And if I need to show you the weekly candle, I will do that. And that's what that looks like on a weekly basis, right? It broke the low of last week, right, down to 124.40, again with the mid figure, and then it closed above, all right?
Hello.
Hello.
Hi, sorry to interrupt. Why did you pick the 125 mark? I may have missed that.
That's fine. It's no big deal. The 1.25 is what I like to call a quarter figure or a quarter number. It's 1.25 zeroed out. So it would be a 1.25000. Okay? Or like another massive one would be like 1.2, right? Which is 1.2 zeroed out. Now we're not going to see that on this chart, but if I go out to the monthly, the 1.2 was actually hit a couple years ago back in here. Okay? And that was the major low that was set basically practically forever. Okay? 1.2. But we're trading here as of the last couple of days at the 1.25 level. Okay? So that's why we use that. Now, another thing too, when I'm trading either GBP, right, which is cable, or if I'm trading Euro, which I believe is fiber, I'll just go ahead and say Euro USD because you guys might not know the nicknames just yet, and that's fine. It's honestly, that's not even a big deal. But when I'm trading GBP or Euro USD, right, Euro USD, I always like to look at the dollar index, okay, also known as Dixie, which is actually where we started at the beginning of the recording, okay, DXY on TradingView, or US dollar index on whatever like foreign brokers you guys may have if you guys have it, but it's always available. It's out there somewhere, okay? So if I'm looking to buy GBP, all right, I want to be looking to short the US dollar, okay? Excuse me. But yeah, so that was the trade that I took this week, and that was really the only one that I took. I didn't really like anything else. I was going to buy Euro here, but I didn't, all right? Short and sweet, I just didn't, okay? So what I can do for you actually is mark up a few whole numbers on here, since that was pretty much the lesson I had for you guys today. So what I'll do is just give me a second here, and I'll mark them up for you. 1.11, one I don't really care about because it's odd. 1.12, not a big deal. 1.13, not going to pay attention to that one either. And the next even one would be 1.14. 1.14 is right there, okay? So you can see that back in late June, 24th, 25th, it did that same thing. Well, opposite, right? Where I told you if it was on a long-term uptrend and price was coming up to 1 point or a whole number, right? And started to consolidate, you know, that's a sign that it's going to, you know, change direction, change the trend, at least in the short term. Long term, Euro could keep going higher. But between you and me, from 1.14 to 1.12, is 200 pips. So why not try and catch a 200 pip move, right? But anyway, so yeah, here's your other example, a recent example of the price. It did push through it, and you have to expect that because, like you guys told me earlier, when traders are getting in at the whole number, they're going to have their stop somewhere, right? Whether it be 10, 15, 20, 30 pips. You know, everyone has a different type of stop loss in terms of number of pips. Or people could have trailing stops or whatever the case is, right? It doesn't matter. Just know that stops are going to be resting there, right? So when you see that the daily or the weekly is closing below, that's a bullish sign, or excuse me, bearish sign. So any up move is probably going to be a false rally. Let's see if we can zoom in here for a second. I know you guys like the smaller time frames. And warp it just a little bit. I want to make sure you guys can see this for sure. Right? It punctured 1.14 and then it sold off. And then it made a pretty distinctive high right in here, right? Right there. And then it came lower and then, well, you know, it just consolidated. But pay attention to this high. And if you want to look at your own charts instead of looking at mine, this was June 26th at 10 Central Time, Central U.S. time, all right? If you were to take this high, that high right in there, and just mark it up on your chart, if you know stops are going to be resting above that short-term high, you can short the short-term high, okay? So we see that here where price dips through a little bit. And by a little bit, I mean like literally a little bit. Just enough. And then price started to head the other way. All right. And this was close to 1.14. It's about 13.90. Not a big deal. All right. But now let's say you guys didn't see the short-term high and you didn't anticipate a stop run before the price heads the other way. And that's not an issue. You guys know me now as Jon Fibonacci, right? So, of course, I'm going to throw up a Fibonacci tool. Fibonacci retracement tool, right? 61.8 came close to that high. So if you got in right at the 61.8 level, you probably would have got a little bit of drawdown. And if I measure that, the 61.8 level up to the high, about 7.5 pips, we'll just go ahead and say 10 with the spread, right? Remember, don't forget about spread, okay? That was 10 pips here. And like I said, we went all the way down to the next whole number, which is 1.12, which is about 186 pips, okay? So what I want you to take away from this, right, is minimal drawdown, minimizing risk, maximizing reward, okay? And that will pretty much cover it, okay? There's really not much more to it than that. And that's how I use Fibonacci retracements, okay? I don't just always pick like random highs and lows and all that type of stuff because you have to work your way down, all right? Like I said in the very beginning, top-down analysis, all right? What are the higher time frames saying? Then we go and we match that on the lower time frame, okay? So I guess you could consider this a lesson on Fibonacci. I mean, it's not too much. There are other things that we look for, like certain markups of supply and demand and certain market manipulation. It all just kind of depends on each specific setup. This setup here was an example of market manipulation. Not the most beautiful one, but it is there. And this down in here was actually a demand level on the daily time frame and an overlap of a whole number as well. So that would have been good to trade on Euro. All right. So that will cover it for the lesson on whole numbers. There's really not much more to it than that because really all it is a horizontal line. and telling you what the price is. All right. So if you can anticipate what the market is going to do next, right, whether it be running lower or higher, right, you can use that to your advantage and line yourself up with the bigger banks. All right. So what I'll do now is I'll just check chat real quick. If you guys have any questions, let me just scroll back a little bit, a few minutes. Yeah, just give me a second. Okay, big banks use this. Price tends to move in increments of 25. That is somewhat true. Bitcoin, yes and no. Okay, so I trade everything on this planet except for cryptocurrency. All right, and that's just me. I have traded it before and made a profit, but it's just not my passion. All right, I just really don't care about crypto, but I know a lot of you do, and that's fine. But if you want to mark up Bitcoin, go to like 5,000, 10,000, and 20,000. Okay. And you see, here's the thing too. I'm glad you brought up Bitcoin because I completely forgot about it. I want to talk about Bitcoin for a second. There are so many different brokers and so many different price providers that it's just hard to be able to tell who's right and who's wrong. Because if you go on Bitcoin right now, or if you do it later, go and mark the $20,000 mark, right? As a matter of fact, I can do that myself. On Bitcoin, when Bitcoin like really exploded back in, I think that was late 2017, right? The bigger whole number would be 20,000, right? Which is right there. So on my feed, and this feed is Bitstamp. I don't know who that is, and I really don't care. But on Bitstamp, it shows us that the high was actually only 19,666, right? Oh, devil number right there. That should tell you enough already. All right, but it never hit 20,000. And some other brokers, I believe, say that it did. I'm not really sure. I've done it before where somebody showed Bitcoin actually hitting 20,000. You see the high for this broker is 19,891. All right. So why is one broker saying 666 and the other one is saying 891? Right. So that I just don't like. But let me just go back a little bit. So Bitcoin, I don't trade. But yeah, like I said, 10,000, 20,000, and you can see what happens around there. Banks want as much as the contract as possible at a low price. Okay, so let's talk about banks for a second. Banks don't always speculate. Okay, speculating meaning they want to buy low and they want to sell high. Okay, banks buy as price is going lower and they exit their positions as price is going higher. Okay, you got to think about the banks for a second and how much money they have. They can afford drawdown because they're trading with millions, billions of dollars, right? So they can afford drawdown. So they're not trying to buy the very low or short the very high. They're basically just averaging down, dollar cost averaging, if you want to look that up. I don't suggest it. I think it's stupid, but banks have to do it because banks can't. If all the banks wanted to buy Bitcoin at whatever price, like 3,000, they couldn't do that in one day. They couldn't just say, you know what? I mean, unless you're fucking George Soros, right? You know, shorting over there, crashing entire economies, right? They can't do that. They have to steadily buy every day, every week over amount of time. All right? They just have that much money. And since everyone and their mom has volume indicators, right? We can see sometimes when volume is increasing, and that's potentially banks showing their hands, right? And if you guys want some golden nuggets on that, I can send you down the rabbit hole. You can actually look up a website or go into Google and type in COT report. All right, I'll drop a couple more nuggets because I feel you guys are a good crowd. Look up the COT report. I'm not going to go too deep into that, but if you want to do some research for yourself, COT report. You're welcome. All right, y'all don't blink, nuggets. I appreciate that. Thank you. Learn something new every time. I'm glad you're learning. What's the group? I'll drop my link here in a few minutes whenever I'm done here at the end. That is my Instagram, Jon Fibonacci. Great info. Thank you. How do you predict that it turns on 50? The 50, I believe that was a question for GBP. It's a halfway point. It's a smaller mid figure. It's in between two other whole numbers. And it was that run on stops, remember? And it started to consolidate at the 50 level. All right. Why did you pick 1.25? We started that. Not too clear, but I'll continue following. Drop a question if you're too unclear. I'll read this, and that's great for price ranging and predictions. Take notes. Right to the whole number 1.12. Yes. Crazy, amazing. Boom. Yeah, guys, yes, this stuff actually works. All right. I wouldn't come on here and just bullshit around. This stuff I really use. I take live trades. I make real money using these concepts. I promise. This is not some garbage, okay? What time frame is the best for Fibonacci? You know, Fibonacci, it can be used on every time frame, but it's not going to work on every time frame because you're not going to have the context behind every single trade. All right, the markets aren't going to turn on the monthly time frame because of a 61.8 level. That's just not going to happen. All right, but I like to use Fibonacci on the smaller time frames when I align it with the higher time frames. Okay, manipulation. Yes, price manipulation. Everything is controlled. Everything out there is controlled. S&P 500, Dow Jones, dollar index, euro, Bitcoin futures, stocks like Walmart, Facebook, Apple, everything. Everything you can think of that has a chart is controlled and manipulated. And the simplest explanation to that is if it wasn't manipulated, nobody would make money because it would be so random that there would be no consistency. But yet some of us have consistency in the markets. The only reason that I can be consistent is because it's consistently manipulated. All right. I hope that didn't go over your head. Coinmarketcap.com. Yeah, that's fine. I mean, like I said, I don't really trade crypto, so that's going to be really up to you guys. Thank you. You're awesome. You guys are awesome. Thank you. I appreciate it. COT report is lit if you know how to decipher it. Yes. COT report is not something I look at very often, but if you can use it to your advantage, you know, that's totally up to you, and I wish you the best. But it's more for like long-term trading. And if I were to use the COT report, I would want to look at it it comes out every Friday for the following Tuesday. It's delayed by 4 or 5 days, but they have indicators out there, and I believe they have a cotreport.com. I'm not sure. I just went to Google. Yeah, you can always go to Google, man. I mean, Google's your friend, okay? I use Fibs on 1 hour chart. Probably works. What time frame do you enter trades on? All of them, okay? But I like to overlap. So if I'm getting ready to buy on the daily, I want to buy on the 1 hour or the 4 hour. Can you chart US 30? Yes, I can. Let me just go through a few more comments, and we'll go to Dow Jones, aka the Dirty 30. All right. And actually, US 30 is futures, not the indices. So if you want to go over the futures, yes, we can do that. But I trade the indices. Okay. So don't get confused on that. So you look at current price first, then you mark your even whole number. Well, I want to know what the price is at first. Sure. When I pull up a chart, it'll tell me the price. And then from that, I will pan out, okay, what's the next whole number? Has it been hit yet? What's the overall market direction, right? What's the overall trend or whatever? What was the high there? Almost 14,000. We didn't get that. Trump said the market is controlled a few months back. Okay. I'm not going to talk too much about Trump because we can get into – that's a whole nother rabbit hole. Trump has actually said I know he's said a lot of dumb shit, but he's had said a lot of smart shit as well. From the very beginning, as far as I can remember, he's been saying that China manipulates their currency. That is true. Trump said the market is controlled a few months back. I've been saying that for years. All right. And he is right. The market is controlled. He controls it to its benefits. LOL. I mean, he's a market maker. He's the president of the United States. I mean, he's basically more powerful than who was it? Janet Yellen, Jerome Powell. All right. And these are Fed chairmen, right? And here's a quick history lesson for you guys as well. Damn it, who is it? The government is actually supposed to be, it's two different government agencies. I'm trying to think of the name. The Federal Reserves. Jesus, that took me a long time. The Federal Reserves is actually outside. It's supposed to be outside of politics on purpose because they don't want politicians to be basically controlling the market. And does it work that way in reality? No, but it's supposed to. Okay, so I thought that was pretty cool, and I found that out. No, he doesn't. Let's keep this on topic. Well, you got my thoughts on that. Could you go over another pair using? Yes, I can. We'll go through Dow Jones, and then I'll go to. As a matter of fact, chat, tell me what y'all's favorite currency pairs are. All right. So drop me your favorite currency pair. I have a feeling you guys are going to tell me anything but majors. I feel like you guys are going to tell me all these exotics and like nothing like Euro or GBP. Okay. So just give me a second. Can you mark up another chart? Not quite getting it. I know some of you might not get it yet. And luckily this is being recorded for you so you can go back and watch it again. But I'll continue and I'll do my best for you. Okay. GJ, GBP, German 30. Okay. German 30. I don't trade. I never have traded it. So unfortunately, I'm not going to be able to do that for you. And I'm sorry. AU and NU. Okay. We got a Kiwi, NZD, WTI, oil. Okay. I really don't trade oil, but I guess I can go over it. US 30, GJ, USD CAD. Well, we went over GBP already. All right, so I'm getting a lot of GJ. Let me just write a few of these down. I'll go over them kind of quickly. Well, I kind of went over Euro already, went over GBP. I did hear an NZD. That's Kiwi. We'll go over that. Oh, yeah, gold. I know a lot of hype has been around gold, and I'll tell you exactly why. Gold has been rallying like a beast. And I actually called the very bottom for it at the end of last year. And I'll tell you how I did that too. All right. So let's go in order of how I told you I was going to do it. Let's go over to the Dirty 30. And for me, that's actually going to be YM1 because that's a future. Futures. YM1. Okay. So I like to look at the indices on a daily basis. All right. And, well, practically we've hit all-time highs. All right. And I believe this is right at 27,300, which is pretty cool. And the other major high that was set was about 26,966. So you see, we've actually been rallying for a while, and it peaked through a little bit and it retraced lower, and then it really jammed higher. All right. So either it's a big short squeeze, meaning price manipulation, meaning it's getting ready to like really tank. I'm not saying that it will, but that's what I'm going to watch for. Because S&P 500 kind of did the same thing, even though S&P was trading at all-time highs earlier than Dow Jones was. But we've actually came across a whole number on the S&P, which is 3,000. Okay. So if you guys want, I believe by the end of the month, we'll be lower than 3,000. I don't think we could run from I don't even know what this is, 2740s to 3,000 and hold it. I don't think we're going to hold it. We may go a little bit higher, but trust me on this. This may close below 3,000 from a monthly basis. And the only reason I say that is because we're overextended and we have a couple gaps in here as well. But yeah, when I trade YM1, or excuse me, the Dow Jones, Dirty 30, whatever, I usually do it on an intraday basis, like 15-minute, 1 hour, stuff like that. But that's kind of hard to explain because the futures move 24 hours. But when I trade these, I typically do the indice. And for Dow Jones, I think that's DJI or DJIA. Give me a second. Yeah, it's DJI. I don't know how I didn't find that a minute ago. But this is kind of what that looks like. And the charts are going to be a little bit different because, like I said, the indices move 24 hours, or excuse me, the futures move 24 hours, 5 days a week, but the indice is only open during the market is only open during the American session. So I believe that's 8:30 Central to like 4:30, something like that. I should probably know that, but I don't, and it's all good. But yeah, so when it comes to indices, I typically only like to buy, okay? And that's only because predominantly the trend is always going to be up for the most part. There's only been a few times in history where we've had either major consolidation or like really big drop-offs. So for the most part, like 90% of the trades that I take on indices are going to be long, okay? And I rarely go short, all right? But here's another gem I'll give for you tonight. Okay. Stocks go down faster than they go up, okay? And I believe, yeah. So this is a photo I made the other day for like studying and stuff. So this was the S&P 500 towards the end of 2018 and the beginning of 2019. So this basically delineates 114 days of price, and that all got wiped out in 14 days. Okay. And then to recover from that, it took about 32 days. And then that pretty much got wiped out within 20 days. Okay. And there's tons of more examples. I haven't marked them up yet, but just know that when stocks are getting ready to fall, it's probably going to be like quick and violent. Okay. And that's just how it is. And especially, with like what Trump's been doing with like the tariffs and the trade wars and the Mexico tariffs, you know, that affected the peso and all that. So he does play a role in the market. But yeah, stocks will go down faster than they go up. But I typically only buy because that's the major trend. Okay. I know you guys said gold. I'll go over gold real quick. Actually, no, it's I use the XAU, not the XAG. Or XAG is silver, XAU is gold, which is under commodities. Yep. Okay. All right, so let's go over gold for a second. Now, again, guys, and I want to drill this into your mind. I use the top-down analysis, okay? So we work our way from the monthly down to the smaller time frames, all right? So we have here a monthly time frame, all right? Now, if you're a hedge fund or if you're a bank or whatever the case is, if you have shorts on gold, you're going to have your stop above like major highs. And major meaning like, guys, these lows are set from 2016, some in 2018. Like we're talking big ass time frame here, okay? So the only highs that were set from, let's see, this is 2016, July 1st, and we'll count these other ones in here from January 1st, and that one's pretty much close together, so I'll just won't mark that one up, okay? So when price is getting ready to take stop losses, right, whether that's on the downside or the upside, it doesn't matter. When price is getting closer and closer, at this point, it's going to act like a magnet, okay? Because, okay, let me rewind for a second. When we're looking at charts, right, when we're looking at these candlesticks, this is what we're looking at. Make this big. I feel like you guys might not be able to see it, right? Filled orders. That's what candlesticks are. Price traded, there was a buyer and a seller at every price, right, that the candlestick is giving us. What I do in my trading is I look for pending orders. Big difference. Huge difference. Okay? Pending orders are going to be the orders that are resting either above or below the market, right? I'll get back to gold in a second. I just want to do this real quick for you. Brush tool, because this is going to play into what's happening on gold. If we have a low or a set of equal lows, right, price will casually come down, and as it's getting closer to the lows, there's going to be pending orders here, okay? I'll just do a P for pending orders. That means people have their stops here. They have sell stops, whatever it is, okay? Price is going to jam down there because that's where the orders are, right? In order to form these candlesticks, we need two things. We need a buyer and a seller, right? So the sellers and the buyers are going to meet where the orders are resting. Easy enough? Let's go back on gold weekly, or excuse me, monthly. Whoops. So if everyone on these hedge funds, right, because I know you guys don't trade on the monthly time frame. Let's just be honest here, okay? They're going to have their stops resting above that major high that was set back in 2016, right? Because if they've been watching gold for the last few years, they're going to have their stops here. So as price is getting closer and closer, that's why gold has been so violent. Look at this day, right? And again, that line is where the major high is at. Look at the day the major high was taken. Look how violent that up candle was, right? Few up candles, a couple down candles, and all of a sudden we get up, a bigger candle, and like I said, it's like a magnet. So all of a sudden, bam, right? The market screams higher, and then again, screams higher because it's gathering all these orders that are resting up here. And if you do your horizontal, that's 1,400, whole number. We're trading above 1,400, okay? And let me see. The other whole number that I looked at on gold was 1,200, which we didn't even see to the end of last year, but I bought this retracement in here because we got a long-term downtrend. It consolidated, made a new high, and then it bounced off of 1,200 right here, and I bought it, and I rode that all the way until February. And that's actually its own different thing. It's called a seasonal tendency, and I'll explain more of that once you guys join my other group, and I promise I'll get into more details about that. But for now, yes, that's why gold has been moving so high, and it's because it's on a rush to get up here because all those pending orders are up here, okay? I know one of you guys said oil. Oil is not really something that I do, all right? I'm going to just keep it honest with you. I do know that there was some massive trades that set up, and I don't remember where they were at. But if I were to use like a monthly and daily time frame, you can, but I don't know how to explain it. I just don't trade oil. There are some supply and demand factors that led to this sell-off. But I'm not going to get too much into that because that is going to be the sauce I will give you when you get into the group. Okay. So yeah, like I said, I don't do oil. I just don't trade it. You can go back and look at major highs being taken or short-term highs being taken for manipulation. But that's about the extent of what I do on oil. All right. I'd rather trade USD CAD than I would with oil. And one of you guys said NZD, sorry. And then I'll do GJ next. NZD, honestly, I thought this low down here was going to be taken. It actually got taken on AUD, not NZD. But like I said earlier, the banks will buy as price is going lower. So the banks pretty much bought on the way down, and then now they're distributing higher above this high, and that's why we're getting a drop off from there. And then now it's just casually going higher, but I wouldn't touch NZD just yet. So this major low was down here, and I thought it was going to get taken. That same major low on the 23rd of May was the same low we saw on AUD. Which was right there. So that major low got taken, and honestly, I missed that boat. All right. I missed it, didn't get in, and it rallied very well. And it's unfortunate, but I didn't get into that. But if you look, 68's right there. 69 is right there. So in between 69 and 68 is 68.50, which is right there. So same scenario with GBP, where you expect the whole number to trade through a little bit, but also it was on that price run, that stop hunt, whatever you guys want to call it, sell trap, whatever, it doesn't matter. So it was same scenario. And even if you miss the boat, right, even if you miss like the kick-ass entry, if you wait for the next day's candle to open and trade lower, you can get in on that retracement, right? Because just like I did with GBP, right, the initial low was here, but it made a high and then it retraced lower here, and that would be the retracement I would get in on, right at that 50%. You see how it hits that 50%, and then it rallied from there, okay? So yeah, that's how I use whole numbers. I'll go over another one. It was GJ, you guys kept saying. I don't know why you guys like GJ so much. Honestly, it's a double-edged sword. It moves a great number of pips, okay? Really, the only thing I can say, I mean, it's been getting crushed. GJ has been getting absolutely smashed on. And I honestly thought 1.40 was going to hold, and it didn't. See, it did react a little bit, enough, maybe like 100, 150 pips. But once it broke through, like, that's a wrap, bro. That's a wrap. If you mark up 1.38, 38 is right there. It might be off by a pip or two. It's not a big deal. Once price broke, retested, and that was obviously resistance. And honestly, I don't know where the bottom is going to be for GJ. I'm not a fan of trying to pick bottoms. I usually wait for the bottom to set in, and then I'll get in on a retracement after the low has been set. But trying to pick the very bottom, excuse me, is like a falling knife, right? I don't know if you've ever heard that term before, falling knife, because that's what it is. I mean, it's very hard to pick highs and lows. I mean, I've done it and I do it, but I mean, I wasted a lot of money before trying to do that. So yeah, what's next for GJ? I just don't know. On the daily time frame, it looks like we are consolidating, but I mean, I guess if this high gets clear, we may get a retracement lower and then higher, but it's just not sexy to me. It's not, there's not a setup that I like on GJ. So here's what I'm going to tell you to do. Okay. When in doubt, stay out. All right. I don't force the market to do anything. I can't force the market to do anything. I can only place trades based off of what I think is going to happen next, aligning myself with the banks. I can't move price. All of us put together can't move price. So I have to wait for the market makers to show their hand before I can do anything. So that's my opinion on GJ. When in doubt, stay out. Just like with crude oil, not something I trade. All right. So yeah, let me check the chat real quick. I haven't been checking chat in a minute. So let me just scroll back a little bit. My thoughts were born for a tank. What does gaps mean? A gap is like a gap in the market. There's a gap right here. There's a gap right there. Or it could be like one big candle that separates a whole bunch of other price action. And I get more in depth in my group when we do that. But as far as like an actual gap, that's what a gap looks like. And we see a lot of that on like stocks. So like Disney and them, like there's just gaps all over the place, especially for like earnings and bad news and all that type of stuff. But that's really more for stocks, not so much for Forex. Let me see. Thank you guys so much, honestly, for the feedback. Been doing this for 5 years. I've looked at a chart damn near every day for the last 5 years. I can't do the math, but it's been I've put in a good portion of my life into this. Okay, so I'll just keep it at that. Don't blink. Yeah, like I said, you might have to watch this recording once or twice or 3 times, whatever it is. Screw gold at this point. Keep going. Stop on seasonal tendency. Yes. So seasonal tendencies, I won't get too much into that, but I'm going to leave you with this to think about. Think about the holidays in February. That's all I want you to think of. Think about the holidays in February, and then go look at the daily time frame. Okay, and that's the extent of what I'm going to do. So if you're willing to do your own homework like I used to do, go for it. GBP NZD, Lord, didn't I say that you guys were going to post some exotic ass currencies? Didn't I say that? GBP NZD. Anticipate watching 3 times. And you can watch 4 if you want. Just depends, man. Everyone has their own way of learning. Some learn fast, some learn slow, some never learn at all, so it just kind of depends. So GBP NZD, from what I can tell, this pair is ass. Okay, doesn't look good. 2.0 obviously is right there. That got hit on the 8th of May this year. That's pretty dope. Next would have been 96. After that would have been 94. Is that right? Yeah, that's right. Next would have been 92, and then 90, 1.90. That would have been a massive figure there. And then 1.88. So not every whole number is going to hold, all right? And there's other factors that play into it, like monthly support, monthly resistance, whatever the case is. And I've honestly, in my life, never even looked at this pair before. I don't even know why I would look at this, but for whatever reason, one of you suggested it. 2.0 was right there. Major high set, okay? That's awesome. Especially, look at that wick. That was such a heavy rejection. That was like a 200 pip rejection in like one day. That's ugly, right? If you're on the wrong side of that, that's ugly. 96 broke, retested, kept going. 92 did show support up to 94 and then kept going. 90 didn't even bother with 90. That just pushed right through. And now we're around 1.88. So, honestly, I don't know, man. If this thing is consolidating and it's showing a willingness to go higher, then yeah, you could probably be a buyer. But this is just like with GJ and oil, this is just not sexy to me. I like the majors. I really do. I love the majors. Euro, cable, and a couple other ones too. Here, you know what? I'm gonna mark up one more chart. I'll talk a little bit more, and this is the last piece of sauce I'm gonna give you for tonight to go do your research on. Okay? I'm gonna write it down for you. This is what I want you to find out. Okay? And you don't have to tell me. It doesn't matter. I already know. Okay? If you want to find out why I trade the Euro USD and GBP so much, find this out. What is the US dollar index? And don't just, oh, John, it's a index of the US dollar. Duh. All right? What I mean is, what is it made of? Right? If I go to Subway and I say, hey, give me the turkey club, right? Okay, we know that's a turkey club, but what is it made of? Okay, well, it's got bread, turkey, mayonnaise, lettuce, tomato, salt, pepper, like whatever. That's what I want you to find out. What is the dollar index made of? What is it comprised of? Okay, go find that out. All right, let me check the chat one more time. I want to see what you guys are saying. Did you say holidays in February on the daily chart? Yes, there's only one major holiday in February, I think, at least for the U.S. Definitely a rewatch list. Thank you so much. Can you look at USD? Oh, Swiss franc. Yes, I love Swiss franc. I like Swiss cheese too. It doesn't have to do anything with it, but yeah, Swissy, I love it. GBP pairs are unstable right now, and that's only for one thing, and right now it's Brexit. That is the only reason. Brexit. Okay. Dixie, 50%. Okay, somebody figured it out already. Dixie, 5 of the currencies made of the majors. I hate CHF. Amazing info. Thank you. Thank you for watching. We'll do Swiss franc real quick, and this will be the last few minutes of what I got to do for you guys. I did trade Swiss franc right in here. Right in here. Okay. Actually, you know what? I want to test you guys and see if you can tell me how I would mark up this chart. So looking at just the weekly time frame, as price is coming lower, looking left, what do you guys think I'm looking at? Tell me in the chat, what do you think I'm looking at? Or what do you guys look at when you see this chart? 97? Good answer. Not what I was looking for, but good answer. High and low, whole numbers. Good answer. Price is coming to a resistance level. Are you sure it's resistance? 97.50? All right, we'll take a look at it. Patterns, I don't look at patterns. That's going to be on you. The trend, we'll take a look at the trend, okay? Definitely a game changer. You're very welcome, thanks. 98, sorry, support. Yes, it was support. 97, it closed above the previous low. Okay, so you guys are right. Last low, 95. 95, we're not there yet. We're getting close, but we're not there yet. Wick, rather. Okay, yes. So when I'm looking at all this, right in here, right? There's only one, well, there's two major lows. There's one at the very bottom, which is cool, but we're not concerned with that because that's like 400 pips away, so we're not even worried about it. And yes, the next one was at 97.16. One of you said 97, so we'll go with that. I think one of you said 97.50. We'll go with that. One of you said trend, so we'll go with that. long-term downtrend. Easy, right? That's easy to spot. So yes, we basically consolidated, right? And then we have driven lower, and we basically hit 97.50, like one of you said, and 97. Okay. But now we didn't trade through 97 very far. And that was because of that low. So what I'll do is take 97.50 away because we don't need it. And that already got traded through. So what I'll do is take the horizontal ray, and again with the snap tool, because I want to snap it to the very pip, okay, that'll be right there. So if I zoom in on the daily, and again, this was a live trade, so I already know all of this in advance, so trust me. And I made a special video for my students and my group for this. So if you guys want access to that, I promise I'm going to drop my link here for you guys to join my team here in a bit. That major low got taken, and we hit 97, and it didn't trade lower. Sorry, because of that run. So from here to here was about 20 pips lower, 22 pips lower. Okay. So now top down, right? So we're at the top, we're at the weekly and daily. Now let's go down to the smaller time frames. 1 hour, 15 minutes, it's up to you. On my video, I actually go all the way down to the 5 minute, but I don't have time for that tonight, and you guys will see that as soon as you sign up, okay? Fibonacci. At this distinctive high, right? It was a distinctive low. We started trading higher. It didn't break this high. It didn't, but it still formed a distinctive high when it sold off right here. So it went to a deep retracement level, 61.8. 97.20. That 20 is a smaller version of a whole number, but you don't need to write that down if you don't want to. It doesn't matter. All right. So that's where I had got in, and then I got out at the new high. Now, it's unfortunate. I could have held this trade a lot longer, actually, because I could have held it through all this, but I just got out. All right. And I don't always get the very bottom and the very high. Okay. I'll be the first to tell you that. All right. But I did take this trade. I think I was like 50 pips. Yeah, it was 50 pips. All right. And so 50 pips doesn't sound like a lot until I tell you what lot size I had, which was a 1.1. Okay, so I'll let you do the math on that. But yeah, so retracement lower here. When this new high was made here, it did retrace again for the 61.8, and then it gapped higher, and we've been on a rally since then. So if you want my opinion, I'm actually bearish on USD CHF, on Swiss franc. And the only reason I'm bearish on Swiss franc is because I'm bearish on dollar index. Simple as that. I believe dollar is highly, oversold. We've been rallying since the beginning of 2018. It ran up here, and there's certain levels that you guys probably don't know about, but that stuff got filled in here, and then we've traded lower. And so I think from a weekly standpoint, dollar is going to collapse, I believe. And on dollar index, we still have this here. Okay. We have that gap from June 28th to the 1st of July. We still have this gap. So if anything, I would like to see this get filled, if anything. So if I'm bearish dollar, I'm going to be long foreign currency, long GBP, long euro. I could be long AUD and NZD and all that, but that falls back on what is the dollar index. All right. And when you guys figure that out, you'll figure out why I like euro and GBP so much. Okay. So let me check chat one more time. Do gaps always get filled? And if so, what time frame? Man, that question has so many there's so many variables. It's the question just can't be answered in a simple yes or no form, or like just yeah, they get filled and always on the 1 hour. Like it doesn't work that way. Gaps often do get filled, but it's a matter of there's a lot of stuff, a lot of factors that go into it. And when you join my group, I promise I'll get into all of that. It depends on how big the gap is, what time frame it's on. Is it showing up on the daily? Is it showing up on the weekly? Did it get filled right away? There's so many other factors. I can't explain all that in 5 minutes. I just can't do it. But the majority of the time they do get filled. But like I said, there's a lot of context. It depends on which pair and a couple other things too. I just can't remember off the top of my head. What is the difference between DXY and WCU? Let me see what WCU even is. World currency unit, US dollar. I don't know. I don't even know what the hell this is. Okay, WCU. I don't know. I have no idea. I have never seen this before, so I couldn't tell you. But it looks pretty similar though to dollar index. But yeah, first time I've seen this in 5 years. So that should answer your question enough right there. Level of knowledge he would take more than one. Oh yes, it would. It would take a long time for me to hand you 5 years of experience. It really would. I can't do it in one night. Appreciate you, John. Learned so much. Thank you for watching. I'm glad you learned, and I look forward to teaching you guys so much more when you join my group. Okay. World currency unit used for many pairs. Cool. I don't know, man. WC. They're similar to the currency. John actually trades the real currency index. Well, you're right, but I actually don't trade the dollar index. I trade opposite. So if I'm bearish dollar index, I'll be looking to buy euro. All right, that's the extent of that. I may get into like dollar futures one day, but it's just not on my priority list as of right now. Yeah. So again, guys, thank you so much for being here. It's been about an hour and a half. And I'll do one quick recap. We went over time frames, and I told you guys to look at the higher time frames instead of the lower. I don't use indicators. I don't do candlestick patterns or chart patterns or any of that. Remember the value of free stuff, baby pips, Google chart. Like when you Google stuff on Google and you look at like free stuff, all right, it just doesn't have a big value, okay? And then I did a lesson on whole numbers, which you guys should be somewhat familiar with. So if I was in your shoes, if somebody was teaching me this and somebody just showed me all of this, I would do exactly what I told you to do. What is the dollar index? Go back into your own charts, your favorite pairs, and mark up those whole numbers. And I promise, if you do that for a little while, you're going to teach yourself and you won't need me. But there's a lot more advanced stuff that I can go over. So if you guys are loving this, I promise it gets way, way better. All right. So yeah, that is going to be a wrap for tonight from me. I guess I can drop my link here if I can.
I can tell you I study hard, and even I'm sitting here learning new stuff.
I'll stop my screen share for a second. And so I can go over here and grab the link that I was talking about.
Mahogany, if you want, you can go ahead and pull up your screen. Up to John, everybody, thank John. This was an amazing session. I know y'all are used to us being a little bit rowdy on Friday nights, but he was dropping, look and listen myself. There's so much here to learn. He's a true trader. He's an educated trader. I mean, this goes to show you that, you know, the more you study these charts, the more you learn. There's so much more, like he was saying, than we already know as far as trend line and supply and demand and support and resistance. He actually studies what the the market makers are doing, what the institutions are doing. And if you know how to follow the institutions, you're always going to be on the right side of the trade. And it's like I said, it's something I have been studying a lot of lately, and that's why I wanted to get him on here. It might be a little over your head, but I promise you, if you learn what he's teaching, it will take your trading to a whole other level. I've been quiet the last week or two because I've been studying stuff, and it's just crazy, mind-blowing. Mahogany, are you still here?
I am still here.
Drop a 777s. Drop me some sevens in the chat. And I'll stop sharing mine. So this is Jon Fibonacci on Facebook, Instagram, and subscribe to his YouTube. He has a lot of content he's going to be sharing. You can reach out to him if you'd like to join him, his private group. You guys can reach out to him about that. He's dropped his links in here, and we're going to let Mahogany start with market mindset. I'll stop sharing. Mahogany, you can take us into some mindset. Everybody follow his YouTube. Hopefully we can get him on again in the future. And always, guys, reach out to me and let me know what you would like to see on Forex'n'Chill. Every week it's something different. Like I said, everybody looks at the market different. I like to give you guys a variety because everybody sees the market different, and it's someone might have something to show you that I can't show you, or something that's going to click for you. So we're gonna keep these phenomenal traders coming and getting you guys this. What took my trading to another level was getting a mentor. I was good, but I wanted to be great, and I still want to be greater. So, even though I'm catching these 200, 300 pip moves, I'm still seeking more knowledge and seeking to understand the depths of the market. There's so much, just being here a year and a half, I don't understand myself. So always a student. You there, Mahogany? You ready to share?
I am here. I am here. Always a student. I'm so glad that Gwen said that, because some people, they get a certain place and they think that they're done learning. So I want to thank Jon for coming on here, for showing us something different and new, for something that is proven. Thank you, Jon, for coming on here and showing people that really, when it comes to doing anything, it is something that it's about sticking to it and showing up. Now, this mindset is going to be short and sweet, but very effective, because what I want to talk about today is the mindset of joining something and not sticking to it. I am sure a lot of you people here who've been with IML, or who have joined any kind of program, as soon as something doesn't go right, you say it doesn't work. I know plenty of people who says trading doesn't work. And the reason that trading doesn't work for them is because of their mindset. Their mindset is that I'm going to look for something and I want to make money in 1 month. I'm going to look for something and I want to know and be the master at it in 4 weeks. And if I don't master it in 4 weeks, it doesn't work. That is a mindset. For anybody who's been with IML for a little while, know that your mindset, in order to be good at anything, had to change. You had to stick with it. You knew that you had to learn, be open, learn something different. You knew that what you were already doing honestly just wasn't working for you, because if it was, it would have put you already where you wanted to be. That's why I really appreciate Jon being on here, because For him to learn what he's done, he had to stick with it. He had to keep going. He had to show up, and he had to not believe that he had to master it in 30 days or else it didn't work. I commend a lot of you guys for still being with IML past 30 days. I've known people who've been with IML for 30 days and they said it didn't work, as they only showed up maybe 4 hours in 30 days. That mindset will not get you to where you want to be. People who are here on a Friday evening, that they could be anywhere in the world, but they're here because they want to show up for something that they're committed to improve in. That's mindset. You guys have to understand that trading is a lot of things, but most of all, it is your mindset. When you have a bad trade, it's your mindset that tells you, I'm going to start over again and I'm going to see what I did wrong. I'm going to start back testing. It's a mindset that says, forget this, I'm gone. It's a mindset that says that this is something that I know that I can do and I'm going to stick with it. It's a mindset that says, on to the next. Let me see if I can go and start doing Tupperware. Mindset in everything is so key. Mindset in life is key. Mindset in Forex is key. So I want to applaud you guys for showing up on not just on a Friday, but for continuing to show up. It's a mindset to make some money and still understand that you still need to learn some other things so that you can continue that money. Thank you guys who are winning in Forex, who are still showing up. Mindset. I want to thank you guys for continuing to show up. I want to thank you guys for whatever that you're doing out there, that you are deciding to stick with it, deciding that you have a vision for your family, for yourself. And I want you to understand that it is the power of your mindset. It's the power of somebody's mindset that even allows for them to be open to try Forex. It's power of mindset for somebody to figure out, this is not working, let me do something different. And I'm talking about even with Forex. I had a thing where I was trying something. If it didn't work, after 1 week, I'm like, okay, let me switch it up. Let me do something different. Because obviously what I've been doing for this past week hasn't been working for me. So let me try something different. And it's not the whole thing of give up and let me just stop and not do it. It was just reevaluating what I'm giving my attention to, or me evaluating what I'm doing, if it's working for me. So again, like I said, this is just really short and sweet. Thank you guys for showing up. Thank you guys for believing in yourself. Thank you guys for believing in Gwen. Thank you guys for believing in whoever introduced Forex to you. Thank you for continuing to have a vision for yourself that keeps you showing up so that you can have more for yourself. Again, money can motivate you, but it's going to be your mindset that keeps you here. It's going to be your mindset that allows for you to be able to show up and then allow somebody else to be able to go forward and move forward. It was Gwen's mindset, which is the reason why I'm here. Gwen said yes, and because she said yes, I was able to participate with Forex. Because I said yes to Forex a long time ago. I just didn't have that proper leadership for me to get to where I was going. So again, I just want everybody to remember, you showing up here tonight is not a small thing. It's mindset. Play it forward. Keep being your own cheerleader. If there's someone that you know that if there's someone that you know that is with Forex, be their cheerleader. or whatever they're doing. Be that person that cheers somebody on for continuing to show up. All right, guys, that's all I wanted to talk about. Thank you so much for being here tonight. Thank you so much for showing up. Keep it going. Be that cheerleader for yourself, be that cheerleader for somebody else in your group. And just keep showing up. All right, thank you so much, Gwen, for letting me share that with everybody tonight. Thank you guys for listening.
Thank you, Mahogany, for always being here and supporting the team. Guys, this will be uploaded sometime tomorrow. Reach out to Jon if you'd like to join him on his IML team. He dropped his information. If you want to follow him on YouTube, Facebook, Instagram, he dropped his information. I can tell you, IML is a great education. It works if you work. I'm thankful I stuck it out. You know, my path to six figures wasn't easy because, as Mahogany said, you know, you got to have the right mindset. Having a great team really helps. And, you know, as IML grows, their knowledge and their teams and their leadership grows. And, you know, it was my intentions to start a strong team and a strong following and just to help everyone. And that's why I started Forex'nChill, and why you find all this free content on YouTube. So I thank you for liking, following, and subscribing. And as I always tell people, even if you don't learn Forex from me, learn it from somebody, because Forex is that powerful. I'm not the kind of person that's going to be like, oh, you need to learn it from me. Learn from who you click with, who you can grow with, because I believe so much in Forex that it's not about me. It's about helping other people and teaching other people. So go where you can grow. Learn Forex. If it's, you know, it's something you really need to do for yourself and your family, stick it out. If it gets tough, you know, just take a break for a couple days, get into some mindset like Mahogany was talking about, but don't give up on Forex and don't give up on yourself, or you're giving up on your future. So I thank you guys for joining. Just follow the page and I'll let you know when we're going to have another Forex'nChill. And I'll see you guys later. This will be on YouTube. You guys have a great night. Anybody got any questions before we go?
Gigi, I have
Yes.
a question. Actually, it's just a suggestion. I tried to send a Facebook request to you for the past 3 months. Now I just understand that you have reached a maximum 5,000 follower. I want to suggest maybe you can open a fan page on Facebook for Forex.
Okay, I got the Forex, the one you see right here, the Forex Global Forex'nChill. You can like it there, and I think inbox me, and I think I got rid of a couple people this week. They got rid of me. So send me an inbox. I have so many friend requests. I mean, I have a lot, and I have a lot of messages on Facebook and on Telegram, and it's hard to keep up with them all. So just inbox me, and I'll hit you up. All right, guys. Everybody good? Like I say, if all hearts and minds are clear, we're going to call it a night, and I'll see you guys on the charts next week. Be blessed, everybody.
Thanks, Gigi.
You too. Thank you very much, Gigi.
Thank you, guys. Thank you, Gwen.
You.